Hi, I'm Christina Robinson, and welcome to another edition of CMS Forex News. Today is Wednesday, January 30th, 2008. A preliminary report from Japan showed that industrial production did not meet expectations of a 2% increase, coming in at 1.4% for December. It was still a rebound from the 2 previous months of declines. In the UK, lenders granted 73,000 loans for home purchases during December, declining from the 81,000 handed out in November. It's the lowest level since records began in 1999 and shows that tight credit conditions are having an adverse effect on the UK housing sector. The central bank will most likely sway towards lowering interest rates in their meeting on February 7th. Fourth quarter GDP growth in the U.S. came to a halt as it recorded an annual rate of 0.6% compared to 4.9% in the third quarter. Exports cooled, business inventories recorded a negative change, and the recession in residential housing was a major drag on the economy. For all of 2007, GDP was 2.2%, the lowest since 2001. In addition, inflation as measured by core PCE, a favorite measuring stick for the Fed, increased to 2.7%, higher than the target level. The ADP employment report surprised expectations and increased by 130,000 in January. The report, which is provided by the private company, is a welcome sign to the U.S. labor market, which has seen claims for unemployment benefits subside recently. The official government report on employment change will come Friday. Of course, the most important piece of fundamental news today was the decision by the FOMC to lower rates by 50 basis points after cutting rates by 75 basis points last week. The committee was pressured by Wall Street calling for lower rates. The euro-dollar pair traded in a range for most of today's session. It hit a high at 1.4816 prior to the New York Open and then came back down in favor of the dollar. In the hours prior to the FOMC meeting, the pair began climbing again and jumped 70 pips to set a new high near 1.4880 following the release. Against the yen, the dollar gave up most of its earlier gains and was trading below 107, 45 minutes after the release. It was a similar story versus the pound as the dollar gave back earlier gains following the FOMC release. The U.S.-Canadian dollar pair hit a one-month low as the Loonie continues advancing following last week's FOMC cut. The pair fell another 60 pips before today's announcement and broke below 0.99 following the release. In a final look, we see that the dollar-Swiss Franc pair fell in favor of the franc following the release and had been edging down during European trading. The franc did well today overall as European carry trade contracted following a big write-down by the Swiss firm UBS. The news increased risk aversion and boosted the franc. There's a lot of fundamental data coming up. Later today in the Asian Pacific session, we get trade balance data out of New Zealand and data on manufacturing, earnings, and housing from Japan. Overnight, the UK will release info on housing prices and consumer confidence. The Eurozone will reveal its preliminary estimate of CPI, and along with Germany, reveal their unemployment rates. Germany will also post its retail sales. Tomorrow, the U.S. will reveal data on personal income and spending, its Chicago PMI, and 2 measures of inflation. Finally, Canada will reveal its monthly GDP figure. And that's it for today's news. Thank you for watching, and join us again tomorrow right here at CMSFX.com.